All right. Ready to go?
Let's do it.
All right.
Let's jump right into it.
Awesome. Hey, everybody. Welcome to the show. This is Mortgage Better with Mike.Bott, and we've got special guest Clennon Hughes.
Hello, everyone. Clennon Hughes, RE/MAX Groupie Gold, your favorite Northern California realtor.
Absolutely. Love that. And I noticed that when you went over to RE/MAX, you changed your email handle to Clennon Sales.
California.
That's it. I love it. I love it. Well, hey, I appreciate you being here today. Kind of discuss, getting to know you, the market, and what we're focusing on to get over this market as, it's ever changing below us.
Right. Because everybody's scared right now. So what I'm here to do is to kind of put some fears to rest and give you guys some information here, Mike and myself. We're going to give you guys some information to help you combat your fear, because fear a lot of times comes from just simply not knowing.
Yep.
And while we don't have all the answers, we know enough to where we can help calm some of your fears and help you understand what's going on in the market so that you can make informed decisions as you move forward.
Absolutely. So it kind of gives us to our first topic at hand, which is your history and the years in business. Tell us a little about yourself.
I'm going to tell you a lot about myself. No, I'm going to get into this very quickly. So I'm originally from Alabama. I moved to California in 2001. I was licensed 3 years later in 2004. I've been here ever since. I've been in this business. I've seen the highs, the lows, the ups and downs. And I'm still here.
Yeah.
So that is...
Gotta love it.
Gotta love it. So I've worked with Mike for a few years now, and I'm not going to embarrass him, but I'll just say that Mike has saved me more than a few times. So he's part of the reason why I'm actually still in the business, because without his help, there were some times where I probably would have lost a few sales.
Yeah. Appraisal kills deals, man.
Exactly.
And that was a couple of times with you, right?
Yeah, well, a couple of times. So it's good people like this making good partnerships with good people that allows people like me to stay in the business so that we can serve you.
Absolutely. And I can't do it without our team here at Summit Funding. We've got Aaron, Blake, JP, our processors, Courtney, and Dominique. So by all means, it's not just me. It's the whole team here at Summit, here Stockton. So, that's great. A little bit about me. I've been in the business for about 6 years. I've got a ridiculously high volume for the time of that I've been in the business. It's about 80 to 90 units per year. I work on a high volume producing team, which is getting me a lot of experience to help out all of my realtor clients, just like Clennon. So I'm glad it's going to great use.
That's it.
Awesome. So I know there's a couple of points that you wanted to start off with. Lay them on me.
All right. So right now, the market is a little volatile.
You've lost all your hair.
I know. It was so long and flowing just last week. So, yeah, this is what happens when you stress out. So it's a tad bit volatile. And I know people have their concerns about where the market's going. In the last couple of years, we've basically had the equivalent of, throwing a piece of meat into a pool of piranhas, right?
Yeah.
It's been a feeding frenzy. People have not known how to navigate that. People that were so eager and excited about getting into the market and buying a home were discouraged. Now that things are changing, people are confused. I have a lot of people that come to me that are basically scratching their heads like, Clennon, what's going on? Simply put, if you're looking to buy, if you have been discouraged or have basically just walked away from the idea of owning your own home, now's a good time to reconsider. Clearly, one of the big things that people are concerned about has been interest rates.
Oh, yeah.
We're hearing this in the news. I mean, you throw in talks of a recession, and people get scared. Here's the reality. Even in a recession's a great time to buy. When things slow down like this, it's a great time to buy. Markets adjust. Prices adjust. So right now, we're in a very unique situation compared to just earlier this year.
Oh, yeah.
You have home prices that are adjusting accordingly.
It's a nice way to put it.
Right? Their prices are adjusting accordingly. Price improvements is what we've been saying. So prices are improving.
Yes.
There aren't as many buyers out because like I said earlier, a lot of people have chosen to walk away. They're scared. They're intimidated. So
yeah. So let's go back to the feeding frenzy. So back in 2019, the market was getting pretty hot. And then, of course, the big C word came around in 2020.
Right.
Kind of put a damper on things at the beginning. Like, we didn't know if we were going to have an economy or a way of life
right.
after that came
right.
about. But then the market started heating up.
It's crazy. 2020 was actually one of the best years that I've had in this business.
Yeah.
And it was shocking.
Yeah.
Because in the early days of 2020, the year that will not be named again.
I don't want a disclaimer about it.
Yeah, I know, right? We don't talk about that.
No.
So at the beginning of, it was very hard. I mean, I basically remember having conversations where we were basically being told, I hope you like the taste of ramen noodles and Spam. Because you guys are going to starve. The first few weeks of April, the last couple of weeks of March, when shelter in place went into effect, it was scary.
Yeah.
By April, I couldn't keep up.
That's true.
Yeah.
Because I remember, so in that time frame, we had, we were just busy, and we went on a team vacation to Vegas for over the weekend as a reward trip for Vegas. 2019. Oh, it was fun. So we got back, and we were working the entire time we were there. Any free time we got, we were just doing applications, talking to people, setting them calm down. And this is Saturday and Sunday, mind you. Right. But when we got back, no joke, I worked 30 days in a row. And that's going to the office, taking appointments. I had probably 5 to 7 appointments a day, 7 days a week, closing loans like mad, and that was in that same time frame. Right as we shut down, I remember working from home, trying to print stuff out and dropping it off at people's houses with the masks on and all this other crap. Right. It was just ridiculous.
Oh, God.
Ridiculous. So
Absolutely.
In that time frame, the feeding frenzy, it got to where the interest rates were so low, money was so accessible to everybody, and the prices of homes haven't necessarily increased to the
right.
level of unattainability,
right.
To stall out is probably the best way to put it.
Right.
That when you went out looking for a home, you either had to come in with additional money over listing. Seen listings for $20,000, $30,000, $50,000, $100,000 over asking, which in our market where the average home price is in the 400,000s at that point, it's kind of ridiculous. You're spending 20%. 10% over the list price of the home. Right. So when a buyer went out and they were making these offers, how was that process? How did that feel?
It was honestly, it was scary.
Yeah.
It was scary and it was confusing. It was as frustrating for me as it was for my clients because I remember, okay, let's offer them $5,000 over asking.
Yep.
People can handle that.
See if they can bite on it.
Yeah, $10,000 over asking. People can handle that. Well, when we started seeing these numbers go from, we've had 10 offers and they're all $5,000 over asking or $7,000 over asking, $10,000 over asking.
Well, and this is within the first few days that the thing has been on the market.
And within the first 4 or 5 days. And then to have to start explaining to people, listen, whatever your price range is, if your loan approval is for $450,000, you probably should be looking at a house around $400,000.
Yeah.
And you should probably have some cash reserves to where you could probably offer $20,000, $25,000 above asking price.
So cash reserves, that's additional money in the bank.
Ready to roll, that's good to go, that you can put down, that you're not going to, it's not going to hurt you.
So if I was a first-time home buyer trying to dig into that market, I was doing my due diligence. I saved up $30,000 FHA, looking at a home that's $400,000, and I've got enough for down payment and closing. Not getting anything from the sellers either in seller credits.
Yeah, because they're not giving you anything. Right.
No, well, they got 10 offers on the table. So in that scenario, when I had my $30,000 that I needed to put down and close a loan, going $10,000 over. That's a tall order.
Big ouch. Big ouch. And everybody wasn't prepared for it. And that's when I started seeing some of the buyers who may have been newer to the market, the first-time home buyers, your younger buyers.
Getting their foot in the door, trying to buy something.
Trying to do something good. You start to see them fall off.
Yeah.
And it became very Darwin, very survival of the fittest.
Yeah.
Which, because there were so many buyers, because money was so accessible, only pushed the prices higher, and it just drew in more and more people. I remember one particular home I was showing to a client of mine. This was close to the end of 2020. The house had been on the market 3 days. They had 27 offers. The highest and best, I believe, was around 35,000 over asking.
Wow! And what was the purchase price of that home? Round figures.
I believe it was just under 500,000.
Wow!
And so my client saw the house. They reached out to me. Hey, Clinton, we like this house. Let's take a look at it. I called the listing agent, and he kind of laughed. He's like, I'm not laughing at you. I'm just laughing because what I'm going to tell you is probably going to have your clients walk away. And it did. And when I told them, they were just shocked. And their initial reaction, like a lot of people at the time, was, well, what's the point if I continue going? And that's when I explained to them, stick with me. And this is not a brag, but you want a knowledgeable realtor in situations like that because we can negotiate for you. Every home seller has a different story. Find a way to reach out to them. Got sidetracked. But the point was, that was the crazy market back then. And it was so crazy. And it continued through 2020 into 2021 to the point that it hit a fevered pitch this year. And I think for my clients, it was so discouraging. For the buyers, it was very encouraging for the sellers until everything shifted, and we're here now.
So now we're here. So the feeding frenzy is gone. Inventory is picking up back in the market. We've got, I think I read on some report, and I'm not quoting anything here right now, but we've got nationally somewhere around a 2 to 3 month supply. Do you happen to know off the top of your head what it is looking like here in your home area?
It's about the same.
Okay.
That's where we are.
Good. We're getting close to that equilibrium that we need.
The balance is coming.
Good. Good. I like that. So as you're taking buyers out now, one of the main thing that I always integrate into our loan presentation, where we meet with the borrower, discuss their options, needs, and payments, is that, hey, there is something coming back. And that is leverage on the buying side. You're going to have a higher negotiating power. There's not as many buyers on the market. The prices are still, they're not dropping drastically, but they're improving. And when you come to a property that you're going to make an offer on, there is that negotiation factor where, hey, you can get a better price, lower your property tax, lower the total dollar amount out of pocket. You can get seller credits. You can get the sellers to pay for an interest rate buy down or even a temporary interest rate buy down, which we're going to get to here in a second. Tell me how that is looking. If I were to go out now where I've got so many more options, because we were talking about maybe a 10 or 15 day supply during that feeding frenzy, just to kind of put it in perspective. Now we're almost at a 90-day supply, which is a lot better. Same thing with like cars. They're starting to ship these out to the dealerships, and they're getting rid of all their markups. Kind of the same thing with the cars, or the homes rather. So tell me what it's like as you're taking your buyers out now.
So much better. And it is. It's just so much better now. Yes,
that stress down.
Yes, because now it's like, okay, we have 5 homes we can go see today. We have 5 we go see in a couple of days. So listing agents are so nice now.
Oh yes.
Oh yeah. There's such a shift in attitudes now. Everyone's very friendly.
You should make an offer. They're willing to work with you.
Exactly.
I hear that a lot.
You know what I get a lot now, and this is not a slam on realtors, but this is just, I guess it's just human nature. When people have the upper hand, they sometimes tend to kind of feel themselves a little bit.
Yeah.
So, which was not so good for buyers because buyers were starting to feel bullied.
Yeah.
In the previous market. Well, now people are a little more friendly. They're calling you back. Hey, Clennon, I see you showed my house over here at XYZ Avenue. What did your buyers think? Hey, we're willing to work with you guys. So that has given my buyers a lot of confidence. They feel good, especially buyers that had been in the market in 2020 and in early 2021 and dropped out this year. And now those that are coming back, the first thing to say is, oh, my God, it's so different now.
Yeah, it is.
And
it's a lot more calm.
It's a lot more calm.
A lot more level-headed. I remember getting in that same time frame on the loan side. To get an offer accepted, you had to remove appraisal contingencies. while you're increasing the value on the property 10, 20, 30, 50 some odd times, some odd $1,000. You have to remove loan contingencies. So I had to make sure that when I sent Clennon and his buyers out looking, that, hey, you got a strong bar, you can remove all these contingencies, we can close in 20 days. That was another thing, shorter escrows. The only thing that we needed was an appraisal, and I was up front with a lot of listing agents like, hey, the only thing that I'm worried about is a turnaround time on the appraisal. If we get if it's outside of a metro area like Stockton, there might be a delay.
Could be a while, and that was another major issue. Again, this is not a slam on anyone in the industry, but we had a hard time with appraisals.
Yes,
I mean sometimes the escrow would be held up because the appraisal would take weeks longer than expected.
And it did. We had a lot of instances where that happened. And I'm not talking like 20 miles away from Stockton.
Heart of the city.
We're talking in the city where we're having these issues because the appraisers were just so overwhelmed by deals.
They were slammed. They were busy. I remember speaking with one appraiser, really nice guy. We had actually had a nice 20-minute conversation. And he was just really venting about how hard he was working.
Yeah.
And he's like, I'm all over the place, and people think that I'm being mean when I tell them I can't get to them for a couple of weeks. He's like, but, man, if I read you the list of how many people I have. It was the same with home inspectors.
Yep.
I remember there were, home inspectors who I worked with for years, and they're great guys, and I still work with them. But they were having most like, Clennon, man, listen, it may take us a week and a half, 2 weeks to get out there. So all of that being said, fast forward back to now, everything's normal, and the people that lived through that, like I said, some of the buyers that left and came back, it's noticeable. I mean, it's very noticeable difference. It's huge. And so for me, and the whole purpose of us having this conversation now is to kind of help people understand that it's not 2021. It's not early 2022. The market has changed. It is more advantageous to buyers. Like you said, buyers have leverage. Sellers are more cooperative.
Yes.
Listing agents are more cooperative. There's more inventory, which means you have more choices, more selection, and less people fighting.
Yeah.
That makes a big difference.
Now you have options when you go out and look, not just what you can get. So on the loan side, I want to you pointed out a whole bunch of pros to this market. What are some of the cons of this market so we can be as candid as possible?
The one big con, and you and I have talked about this on several occasions, people are scared of the interest rates.
Understandable. And that relates to payments. That's what you're paying to put the roof over your head.
Exactly.
There's a lot of times back in, last couple of years where the amount that you were paying on rent was probably the amount that you'd be paying on a mortgage. Now we're in a scenario where interest rates have doubled since January or so, where we're coming up with different programs to make sure that we can come to help you out on that payment side. Right. So that's where our rate buy downs come into play. So there are a couple of different rate buy downs that Summit Funding offers. Number one is going to be a permanent rate buy down. Every lender offers a permanent rate buy down. That's basically where you pay cash at closing in exchange for a lower interest rate, ergo a lower payment. So let's take a loan amount, for example, $400,000. Okay. You let's say we're closing somewhere in that 6.99%, 7% range. Whew. That's high.
Right.
But it's what the market is right now. So we're closing it at 7% interest. To get that down to an eighth, 0.125%, it's going to save you somewhere around $35-ish per month. That rate buy down, based on that loan amount, could cost you about $1,000 to $1,500. And there's no exact scale to that, but it's just how the market's reacting for any given day is how that buy down goes.
Right.
So if you want to buy it down to 3.99%, that scale is going to be somewhere around $30,000 in points. It's not realistic.
Right.
What I always look to do with every single one of my buyers is to find that happy medium. Find that spot on the rate sheet where it makes a lot of sense. Hey, you've got $50,000 in the bank. It's going to take you $30,000 to close on this loan, meaning we've got some cash left over. Hey, and look, the seller's contributing $5,000 to your closing cost. So we've got, in that scenario, almost $25,000 to play around with. What should we do with that? Well, we can do a permanent rate buy down, but my number one thing that I have been slanging everywhere is our Smooth Start program. The Smooth Start program is a temporary interest rate buy down program that can go up to 3 years. You can lower your interest rate on the first year by 3%. So take that 7% example again. We're lowering that monthly interest rate to 4%.
Big drop.
Huge drop.
Huge drop.
So it's only for the first year, first 12 payments, but I mean you're saving $500 to $600 per month, if not more. Higher the loan amount, the more the savings. Now, we are using the seller credits and your cash to start that program, almost like a permanent rate buy down. But here is where the Smooth Start program gets really good. You take that money, you buy this program, boom. We start a savings account that saves all of that money over here. When you buy down that interest rate permanently, boom, it's gone, withered away. You bought that rate, and the math there to make it seem worth it is going to be to calculate the break-even point. Right. So if I buy down my rate $10,000, I'm going to save $150, $200 per month at the most with that 10 grand. How long is it going to break even? Typical break even on a rate buy down, and this can go in a small or big, just depending on the scale. It's usually 5 to 7 years. Okay. So meaning you have to keep that loan 5 to 7 years, 60 to 84 payments, of monthly savings, $150 to $200 to equate that $10,000. That's just to break even.
That's just break even.
So what happens in 2 years when the rates get better? You're going to refinance, right?
You're going to refinance.
What happens in 2 years if the rates don't get better? You're still in a good spot.
You're still in a good spot.
You're still in a good spot. So there's pros and cons to both each
Absolutely.
one. That's a permanent rate buy down. Money goes away. You bought that rate. You get a lower permanent rate for the entire 30 years. Nobody ever keeps their loan for 30 years. They pay it off early. They refinance. They go buy another home. They get full cash out of the property. So hardly ever do we see somebody on their 29th year of their mortgage. And they just come into money and then pay it off.
Absolutely.
Temporary, that Smooth Start program. So let's say that program there on the 3-year costs $15,000, $18,000. Still putting that money aside. When you make your payment that's $600 lower, we're pulling that $600 from the savings account. So we're subsidizing it with your cash. That's the Smooth Start program. Second year, 2% lower. Third year, 1% lower. And here's the best part. Years 4 through 30, fixed rate loan. It's not an adjustable. It's just for the first 3 years, it eases you into that monthly payment.
Right.
So 2 or 3 years down the road, let's say even 1 year. Let's get aggressive. 1 year after you close, rates get better. Oh man, I'm paying, 7%. Bought it down to 4. It's going to jump up to 5, and the rates are already at 5.
Right.
I think I should refinance just to keep my payment where it's at.
Right.
Good thing about that program, all that money in that bank, if there's anything left, whether it be $1 or $10,000, it comes back to you and your principal loan. So when you go to refinance, we give you that money back. Your principal balance goes down. So not only do you get to have your lower payment, put all this money towards this program, you get that money back if the market improves. And that is where it negates that entire issue of that break even on that permanent rate buy down. So if you're putting all that money forward, and it's like you're leaving money on the table if you refinance early.
Right.
So it's kind of a hard math to do, that if you pay 10 grand up front and you're only getting $3,000 of it, poor life decision. So that's why we have both of those options. If you're buying down the rate a lot, I typically don't like to recommend that in a market like this.
Right.
Yeah. Any questions on how that works?
Well, I was just about to say, that's the beauty of what we're doing here right now. And this is why I appreciate us taking the time to do this right now, is to give people options, let them know that, hey, we see the doom and gloom on the news.
Yes.
We watch the news, we see it, we hear it. However, we're in the trenches here.
Yes.
We're working it. So we know that there are ways to combat all the doom and gloom. Like what Mike just broke down for you right here is a perfect example of why you should seek out professionals, people that are active in the market, people that are in here, blood, sweat, and tears, 6-7 days a week.
Yeah.
Because let's be honest, we work like crazy.
It is what it is. Crazy industry, crazy people.
That's it, crazy people. So we work this, and we know that, hey, just because you're seeing all this doom and gloom does not mean that everything has to be doom and gloom.
Exactly.
There are ways to work. It just comes down to having the right people. Right people
have the right solutions for your issue.
And
that's why you go to professionals. That's a perfect point. Because, for a lot of people, so you've had repeat clients, right?
Yeah, amen.
Good. So you've had repeat clients. How often do they buy a home?
Every few years, some of them I've had them come back maybe not every, but I have maybe 6, 7 years, depending on the situations.
So 6, 7 years, they're buying a home.
Right.
So go back 6, 7 years ago, I was just starting out in the business. You've been in the business probably at that point, what, about 7 to 10 years?
About 10, 11 years.
Okay,
yeah.
So in that scenario, you're closing loans, or I'm sorry, you're closing homes every month. I'm the loan guy. I'm closing loans, every single month. I'm knee deep in it. We're doing it every day. We're a trusted professional for you, for that client to say, hey, everything was great 6 and 7 years ago. Let me educate you on how things have changed. And that's what we bring to the table. And that's the value about using a local agent, knows the market, knee deep in it, and surrounded and entrenched in it, and B, to give you that upper hand on that negotiation when time comes.
That's it, absolutely. And this is why, to echo what he's saying, it is imperative to have people that are here.
Yes.
A lot of times, especially in transitional markets like the one we're in now, people tend to get advice from people that mean well.
Absolutely.
But may not be knowledgeable about the current market.
Mm-hmm.
And there's always somebody's uncles, girlfriends, cousins,
my
sisters.
aunt's brother's sister's cousin used to do loans in 2002, and she says that you can give them a better interest rate and give them $10,000 back at closing.
Yeah, and it's like, like I remember late last year, I remember I had a client I was working with, and they're like, well, my mom was a realtor, and she says that we should be asking these sellers to give us some credits. I'm like,
that was the same client that we were working on.
Yeah, and I'm like, I don't know how to take this, but your mother has no idea what's going on in this current market. You have 20 offers,
yes,
all of them above asking. I'm not going to go and ask a seller, oh, hey, well, we want this, because the first thing to do is look at you and laugh, if they even hear you at all. I always tell people, in situations like that, you want your best and highest. And if you don't do that, your offer is going to go into the T file.
Yes.
The trash. They're not going to look at it. They're not going to, which is why it's important to have people that are up to date, because
seller credits?
Yeah, what seller credits? What are those? Yeah, those don't exist. They exist now. Earlier this year, they did not. And again, if you have people that are currently in the market that are working now, we're working through the transition.
Yes.
So we understand. Mike and I work together closely. He educates me on the finance side, and he gets feedback from me on what's going on here at Transactionally, working with the buyers and sellers and see what's going on with the market. And in doing so, we both get a well-rounded picture of the current market. And that's how we are able to offer solutions to people and educate them, because the more we're educated, the better we can educate you. That way, you're not one of these people who thinks that I can go and write an offer $10,000 below asking when everybody else is
in a piranha market.
Exactly. Well, my dad says that we should go 10,000 lower. Your dad obviously wants you to stay in the house with him, because otherwise he wouldn't be giving you that advice.
Yeah, absolutely.
But yeah,
and that's that should speak volumes, because education, whenever a typical loan consultation for myself is nothing compared to the buyer scenario when you're meeting with them for the first time. You send them over to us, and then we send them back out, back to you, and then you start spending time with them at the home, because the amount of education that I get with that hour and a half loan consultation is probably half of that. And it's not... what's the word I'm looking for? It's not putting them down for the preconceived notions, or I know that's the wrong way of saying that, but it's not saying that, hey, you're wrong.
No. It's about education.
It's about, hey, you've got a good point there. Let me straighten that out for you, so that when you go out there and work in this market and start making offers and you find that right home, it's going to get accepted, because that is what we do. And
that's the ultimate goal. And that is the thing that I drive home to people, because sometimes, it can get a little adversarial sometimes, because people have their preconceived notions. They have what I believe to be the truth. And again, they're getting information from people who, in a lot of cases, are very well-meaning.
Yes.
They're just misinformed.
Misinformed, or a little bit delayed.
A little delayed, right.
Not that way, but, just... All right, awesome. So I think we've kind of covered quite a bit here. Smooth Start program is something that we're really boasting right now. Another thing that we have is our higher conforming loan limits. Off the top of your head, what's the conforming loan limit for San Joaquin County?
715 right now.
Close. Don't showbiz me now. It's the conforming loan limit is 647,200, and that's Stanislaus. Sacramento County has a high balance, but for the standard conforming, 647,200. Meaning, you can go out, you can put 3% on top of that for a first-time home buyer, 5% if you're not a first-time home buyer on top of that 647, and get a standard conventional loan. Summit Funding offers a 715 loan amount. So that gives you more options when it comes to lower down payment, eliminating jumbo loans. Yeah. Jumbo loans are always fun. And eliminating a first and second if you're still trying to avoid that jumbo loan if you don't qualify for that jumbo. Right. So what I'm talking about here is a couple of different loan programs. Jumbo loans are typically anything over $647,000. Those loans are tough. They want you to be super credit worthy. They want you to have a low debt to income, more money to pay your bills than you need, essentially, because they're not selling these loans off on the market. So they have all these additional guidelines that makes it tougher for a regular person to buy.
Because they're maintaining the risk.
Exactly. Yeah. They're keeping that loan when we sell it off to that jumbo investor. They're keeping it on their books. They're not selling it off to mortgage-backed securities. They're just keeping it on their books and like, hey, we giving you option. You got to follow our rules. Now, of the many different jumbo investors, there's a lot of different requirements, reserves, debt to income, that sort of thing. Conventional, FHA, USDA, Govvies loans, those are pretty lenient when it comes to it. They let you max out your income, essentially, max out your debt to income, and they don't usually require things like reserves, extra money in the bank in case, you lose your job for a month. You got enough money to do that. So that's where that 715 comes in. That's what? $65,000, $66,000.
Big difference.
And if you want to be at that, $800,000 price point with 10% down, that squeaks you right in that neighborhood where, hey, yeah, this can work, whereas before it couldn't work because you weren't jumbo worthy. So that's another one thing that I wanted to pump up today is the Smooth Start program, temporary interest rate, permanent rate buy downs, as well as our increased loan amounts here at Summit Funding. And we also offer long-term locks on those too. So if you got a little bit of a longer lock time or a little bit longer of escrow, because this market will entertain that at least right now, we also offer a free float down in that scenario.
There you go. Yep. That's why I kind of jumped the gun at 715.
That's all right.
As far as I'm concerned, I'm sort of concerned it's about Summit Funding. So Summit Funding tells me this is what they can do. That's all that goes in my head. So,
I love it.
Yeah.
Well, and I got you all those flyers, so they're fresh in your mind.
That's it. So they're fresh in my mind. Like 715 is like, oh, that's not right. But as far as I'm concerned, it's right because I would deal with Summit Funding. So, yeah.
So based on your history and your experience in the business, how are we going to know when we're out of this market?
It's a good question. So you and I had a conversation earlier off camera, and we were talking about people wanting to sell at the height of the market or buy at the lowest part of the market. And the answer to that question is, when do we know? After we've passed it. How do you know you've hit the height of the market? When everything starts to come down. There's no way to know before then, right? Mm-hmm. Like we were saying before, neither one of us has a DeLorean with a flux capacitor.
Nope.
We can't jump forward in time, which is why when we see opportunities like right now, take advantage of those opportunities. If you see a market like this where there's volatility that can be used to your advantage, jump on it. Because the fact of the matter is, for all of our training, all of our experience, I've been doing this 18 years. Mm-hmm. Mike's been in several years himself. For all we know, we're not psychic.
No.
We don't have a crystal ball that can tell us what's going to happen. We do the best we can with the information available.
Absolutely.
Which means that if we see opportunities, we take them.
Yep.
Now, could things get better? Possibly. Could things get worse? Possibly.
Yeah.
I've had people, I have a client right now. I've been dealing with this client for since the beginning of 2020.
Okay. That's a long time.
Long time. So, and he's come in and out of the market. What happened was he kind of delayed. He kind of was like, well, I'm going to take my time. I found him a couple of houses.
Yeah.
And he's like, I think I could do better. As things progressed in 2020, I kept telling him, hey, listen, man, if you're going to buy, you need to pull the trigger now.
Yeah.
If not, you're going to be in a world of hurt. So he went from being, with the approval amount that he had, he went from being able to buy a pretty nice house to a okay house.
Oh, no.
To a condo.
Oh, no.
And then he got to the point where he couldn't even afford, in the area he was looking for.
Right.
It was to the point where, okay, you know what? You're not getting anything now.
Yeah.
And now he's had to wait and sit on the sidelines. Thank God he was patient. Now he's come back, and now he's a little more receptive to me.
Good.
And the point being is that he was being fed bad information, and it was coming from good people, people that cared about him. Unfortunately, it was bad information. It was bad information from good people. He had to learn a lesson the hard way. Fortunately for him, 2 years later, things have turned around, and he will be able to buy. But the thing I tried to stress to him, and the thing I'm stressing now, is because you don't know, because no one has a crystal ball, seize the opportunities when they arise.
Yes.
And right now, like we said before, between less buyers, more inventory, options that work out for rates with great guys like Mike.Bott and Summit Funding, there's an opportunity now.
Yeah.
Again, will there be an opportunity better than this? Maybe. Do you want to risk that? No. We have a saying, correct me, because I sometimes get this wrong. You marry the house and date the rate? Is that
marry the home and date that loan?
Marry the home, date that loan. Meaning that, hey, if you see an opportunity here, take it. And if you're worried about rates, you have options, like Mike said.
Absolutely.
There's always things. You're not going to be stuck there forever. Like we said, we very rarely see people at year 28 of a loan.
We don't. And you're 28 selling a home, being in there, they might be downsizing or something like that. Yeah, right. We see that quite a bit.
Right.
But at year 28 of the actual loan term, we don't see. And that brings me on another point that I wanted to make is, people are worried that they're buying at the top of the market, and they're worried that they're going to lose on their butt, when they go to sell or just in general. And the reason why I want to touch on that is, if you can provide a home, a roof over your kids' heads, over your head, that you can call your own, that you can build equity in, it doesn't matter how much equity in. If you can afford that payment, live comfortably, and get that home and make it yours, who cares what you're going to sell it for?
Right.
The only time that I would discourage anything like that is if you had a defined timeline for when you're going to be in a certain area.
Exactly.
So it doesn't matter. Investors are something different. We were not going to get into investing today on homes because it's just going to get us down that wrong wormhole. But as far as a buyer getting the home, you got to seize the day. You got to take advantage of it.
Carpe diem, seize the day. And the fact of the matter is, the way markets shift, tides ebb and flow, things go up, things go down. You could buy a home, and the truth of the matter is, it could take a dip.
Yeah.
Depending on how long you're going to be there, you can see it come back around. And and I've seen that happen. I've seen people, and I've dealt with this a bunch of times. Someone will buy a home, say they buy a home at $350. Market takes a hit. At one point, they may be down to $300. A couple of years later, they're back at $350, $360, $375. Well, in that time period, they've been making payments. They've been building equity.
Oh, one other thing, too. They've been getting raises at work.
They've been raised at work, or they've started businesses. They're making more money than they were before. Their wife, they've gotten married. Their wife that's two incomes now.
Two incomes versus one.
Right. Things have gotten improved in a lifetime, in their life, and now they're in a position where we're making more money. We can do more. Our house has lost value and gained value. Then it's just like anything else.
Yep.
It's determined. Markets dictate price. Buyers dictate markets.
Yes.
It's all about what people are willing to pay for something. And yes, people see dips and rises again. And it just depends. I was just dealing with a seller a few months ago. They bought their house around $400,000. We went to sell at $550. It was right when the market transitioned. Wow. When the market shifted. That home value has started to dip now. But they're still ahead.
Good.
They're still ahead.
They put a down payment on there, right?
And that's it.
They're making payments. They still have that defined equity. And to be real, equity is, not tangible until you sell or try to pull money out of the property.
Exactly.
You're not going to even need it. I've got $100,000 in equity on the house. Like, yeah, so what?
Right.
Are you selling it? And then
right.
what's the big deal? And that a lot of people have to realize that it's like, yeah, you definitely have some equity, and that's good. That's good
right.
for your future.
Right.
On the loan side, you can get a reverse mortgage to help pay once you hit, I think, the age is 55. You can sell it, buy an RV, travel across the country.
Right.
It'll help supplement and fund your retirement. So there's always loan products available for that equity. But if you just delay, you're missing time after time after time and year after year after year of
right.
building that equity. So
Absolutely.
that's one thing that we want to stress is get in if you can. Make those efforts, make it hurt. One thing, I just started working. I was probably 19, maybe 20, ornery little guy I was. But I was a carpenter, and working with a whole bunch of older gentlemen at the place. It was in 2008, 2009.
Okay.
One guy, Jim Balsh, I'll never forget the guy. I hope he's watching. He's probably not. But he always told me, and it was like, what are you doing for your retirement? And it's like, I think, don't we have a pension with the union? And he's just like, yeah, but what else? It's like, man, let me tell you something. The only reason I'm here working right now is because I did not save enough. Put money in your retirement, find the accounts that you can do, and make it hurt now.
Right.
The reason being is compounding interest in an account. Same thing with your home. That equity is going to compound every single year you have it.
Absolutely.
And then when you get to a certain point in your life and you still own those assets, still own those bank accounts, retirement accounts, properties, you're going to have options versus a Social Security check every month.
Right.
So I think that is probably one of the many points that I wanted to hit on. Let's see here. I think we hit on everything that you wanted. Anything else you want to add?
I think we hit on everything. I mean, the main focus, like I said, of this conversation, which I appreciate you having me on so we can talk about, is to let buyers know right now, buyers, if you're looking to buy a home, you're kind of in the driver's seat right now.
Oh, yeah, big time.
And I know this is sudden, but especially if you were looking to buy earlier this year, it seems like maybe it's too good to be true, but the reality is this is the way the world works. Yeah. This is the way markets work, and not just real estate, but all markets. You'll have sudden shifts, and it's those of us that are vigilant and observant. Take the time to watch things, and when you see the opportunities, seize them.
Yes.
Sun Tzu in Art of War says that when your opponent leaves an opening, strike as swift as a hare. And it's the same thing when it comes to markets like real estate. If there's an opportunity, take it. Yeah. Because this is a long-term investment. And like we said before, your investment may go down, it may go up, but you take the time to grasp that opportunity to get what you want. The same thing applies when it comes time to sell. If you find the right time to sell, it works out.
I love that.
Yeah. So
I love that.
Take advantage right now. The time is now. Like I said, we have no idea what's going to happen in the next year, 6 months. We don't know.
We can project. We can read what the experts are saying. We can try to give our expert opinion. But, experts have been wrong.
Experts have been wrong plenty of times. Like you and I were talking off camera,
Yeah.
I remember there was a quote from this expert that said that, this email thing that you guys are talking about is a fad. Fax is going to work. Yeah, and it's like, I can't remember the last time I sent a fax. So
every time I try to send a fax, it doesn't go through because faxes don't work.
Faxes don't work. So it's experts aren't 100%.
Yes.
And the one thing that experts can be 100% on is seeing an opportunity. So if you see it, grasp it right now. If you've been looking to buy, if you need a home, if you're trying to start your future, if you're trying to build something for yourself, for your family, now's the time. Like I said, prices are adjusting. So, and we're seeing drops, like major price corrections.
Price improvements.
We're seeing price improvements of up to $100,000 in some cases.
Wow.
I was just looking at a home that was originally listed at, I want to say it was listed at 750 630, I believe.
Oh, wow.
It's now down to 629.
Wow.
So
that's huge.
That's huge. And in some cases they're different, but we're seeing drops of, $20,000, $30,000, $40,000. I mean, we're talking 5-10% drops in some cases. Some people are predicting it can get close to 20, depending on the certain market conditions.
Yeah.
We don't know that. All I know is right now, and right now is a great time. You have leverage. Sellers are understanding now that they are no longer in the driver's seat. They don't have a piranha feeding frenzy of 30 buyers on one house, so they're more willing to cooperate. Great mortgage companies like Summit Funding and great guys like Mike.Bott, they're finding creative ways to get you in the home that will kind of ease the ouch of buying.
Ease the ouch, spread it over a little bit of a term,
spread it around.
And then give you options. And truthfully, Clennon here, he's not going to force you to buy. I definitely am not going to force you to buy. What we're going to do is provide the education, provide you with the numbers, provide you with the options. And there's no pressure to act, but there's that optimism to make sure that you are in a scenario where you're going to better your life if you own a home.
Absolutely.
If you act now, you're going to see some things in the market that we haven't seen. And, you're going to have that leverage. Ever try screwing in the little wall plate on an outlet in your house with your fingernail?
Right.
And you just go get the damn screwdriver.
Yeah, go get the screwdriver. Let's do it. So, and that's the most important thing is that, understanding that we are looking out for your best interest, because in this business, you have people that don't look out for your best interest, and they tend to not last. I'm in this for the long haul. Mike's in this for the long haul. This is our bread and butter. And the best way for us to do that is to engender trust. And the best way to do that is to do things that work best for you.
Yep.
Mike mentioned earlier, repeat business, referral clients, repeat clients. They come back because we take care of them.
Absolutely.
And we give them good advice. So the good advice right now, if you're thinking about buying, strike while the iron's hot.
Make it happen.
Make it happen.
All right. Well, awesome, Clennon. Appreciate you being here today.
I appreciate you having me over, man.
This is awesome. This is going to be recurring. We're going to have many different agents. We're going to definitely have Clennon back. This has been amazing. Clennon, I appreciate it. This is Mike.Bott with Mortgage Better with Mike.Bott. Be sure to like and subscribe and do all that fancy stuff.
And this is, again, Clennon Hughes, your favorite #1 Northern California realtor with RE/MAX Group Gold. I'm trying different taglines, Mike. I'm going to try one with you right now.
Okay.
You can't lose with Clennon Hughes.
I love it.
You like that? You like that?
Love it.
You can't lose with Clennon Hughes. HughesSalesCA.com is the website. HUGHES salesca.com. Check me out.
Man, that just rolled off the tongue like that.
Right?
I love
it.
Smooth.
Smooth.
All right.